No, not that Bradley Cooper. I'm Bradley Cooper, the CPA. I wanted to talk a little bit today about home office expense deductions and different aspects of that deduction. First, I think we need to understand the purpose of this law. The purpose is it allows the individual who owns a home to be able to deduct the personal expenses on their business tax return if they qualify. A couple of things in there that we need to understand. One, individuals own homes. Corporations and partnerships do not own homes. Therefore, a partnership tax return nor a corporation tax return is allowed to deduct home office expenses. However, the owners of those corporations and partnerships each own a home. Now, when I say own, let me be very clear. Either you own the home, which means that you have bought the home, probably have financed that home, that is still a home that you own. However, own in this discussion is also going to mean that you rent a home. So if you have a home, whether you buy it or whether you rent it, that home is going to be deductible, or at least a portion of the expenses of that home is going to be deductible if you use it for business expenses and qualify otherwise to deduct this home. Now, there are three kinds of individuals that have a home. One is going to be an employee. Two are going to be partners in a partnership. And three are going to be sole proprietors. So let's talk about those three individuals to see how their home office deductions are going to be reported on their tax returns. We'll do the easiest first, and that's employees. Employee is someone who works for another company. They receive a W-2. However, many times those employees have to do some work at home, and they have already allocated a space at their home to do that work. As of the 1st of 2018, because of the new law, those people cannot deduct any of their home office expenses. So if you fall in that category, you have no deduction. Next, let's talk about the partners of a partnership. Those people are going to calculate the deduction, as we will explain with the sole proprietors. However, they are allowed to deduct their home office expense against their partnership income, and they will deduct that on Schedule E, right where they put their partnership income. So they are allowed to deduct that expense, and that is the place that they can deduct it. But I want to spend most of my time today talking about sole proprietors and how they deduct their home office expenses. First, we need to understand when a home office qualifies for this deduction. The first thing is that we need to know that the home office needs to be used regularly and exclusively for business. Let's talk about this exclusive word as to what it means. Let's assume that an individual has a home and they have a spare bedroom that they use as their office. In that office, they have a file cabinet, a desk, a computer, a printer, all the things that go along with an office. But they also have a bed in the corner. Does the bed in the corner disallow the deduction? No, it doesn't, as long as it is not used for personal purposes. If we have some company come over one night and they sleep in that bed, that office is not deductible now because it is not used exclusively for business. Let's use that same example, and let's say that we do have a child that sleeps in that room. Every night they're in that room. Can I deduct the home office deduction? Yes, you can. There's no rule that says you have to have 4 walls around the home office. It just has to be a space that is used regularly and exclusively for business. So what we would do is we would measure the space that the office is using within that room. And that is the amount that we're going to use in order to calculate the home office deduction. Now, in order for this deduction to take place, this office has to be the main place that the taxpayer does business, or the place that he meets customers in a regular course of his business. It could also be a space that they store inventory if they are in a retail business, or supplies if they're in any other kind of business. As an example, I have several clients who are contractors, and they use their home as an office. So they have a space in their home that they use as an office. They also have a space in their home that they use to store materials that they use on their jobs. Both spaces are going to qualify for the home office deduction. So how is this home office deduction calculated? What we do is we take the square footage of the office over the square footage of the home, and we come up with a percentage or a ratio. We're now going to multiply that percentage times all of the expenses that we incur to maintain that home. Let's talk about some of those expenses that qualify and some that are not home office expenses. One, when I think of home office expenses, I always think about interest, taxes on the home, and insurance and utilities. I would expect to see those expenses on every one of these if you own the home. Now, if you're renting the home, I would expect to see rent expense and possibly insurance for renters insurance. However, we're not limited to just those expenses. We are eligible to deduct all of the expenses that we incur to maintain that home, such as if we are repairing the home, then we're able to deduct those expenses as well. If we have someone who maintains the yard, then those expenses are going to be deductible. If we have someone who sprays for pests, those deductions are going to be deductible. However, some expenses are not home office expenses, they're simply office expenses. Office expenses that many people confuse with home office expenses might be office supplies that we use in that office. Maybe the internet that we use in that office. Maybe the cell phone or the landline phone that we use in that office. Those expenses are deductible on Schedule C as a business expense and not as a home office expense. The reason for that is that home office expenses are limited. And we'll talk about this limitation in a moment. Right now I want to continue on with how we calculate these deductions. So now we have the percentage that we use the home for the business. We multiply it times each one of these deductions. One deduction that I left off is depreciation if you own the home. You are allowed to depreciate this home. These expenses are going to be divided into two categories. One is interest and property taxes. Those expenses are deductible without limitation. However, all of the other expenses have a limitation, and that limitation is taxable income. As an example, let's say that taxable income before home office deductions is $10,000. And let's say that the interest and the property taxes are $6,000. Now we have a profit from this business of $4,000. If our other expenses to maintain this home add up to $6,000, we are eligible to deduct $4,000. The $2,000 will be carried over to next year and added to next year's home office expenses to see if we can deduct them then. However, we're going to have this same limitation year after year. If you're not making a profit in this company, then you will not be able to deduct any home office expenses other than the interest and the property taxes on your home. There are two methods in which we can deduct home office expenses. One is a regular method that I've just explained to you. However, there is a safe harbor or an easier method in order to make this calculation. And that calculation is $5 a square foot up to 300 square feet of home office. You are eligible to take the higher of those two deductions, and you can change from year to year. You are not locked in to one method based on the method that you first used. One rule that I think we need to understand before we start taking these home office deductions is, what if we decide to sell our home in the future? Many of you know that we could exclude a certain amount of gain on our home when we sell it. But that applies to our primary personal residence. It does not apply to our home office. So how does the home office deduction affect what it is that we're doing here? If we have a home office, then any depreciation that has been taken will be added back to income in the year that we sell it. Let me use an example. Let's say that we sell our home for $400,000 and we have a cost basis of $300,000. Therefore, we have $100,000 worth of gain. None of that gain will be taxable. However, if we have deducted $5,000 in depreciation on our home office, then that $5,000 depreciation will be taxable as gain on our home. These are the general rules for home office deductions. There are other rules that apply, but they don't apply very broadly. And there are some exceptions to these rules. So I would suggest that you learn these rules yourself if you prepare your own tax return, or at least have a tax preparer who understands at least the things that we've been talking about today if you're going to let them prepare your tax return. We have clients all over the country that we prepare tax returns for that use the home office deduction. I don't think there's a problem in the world with that deduction. I have heard some tax preparers say that they do not take that deduction because it throws up a red flag to the Internal Revenue Service. I have many clients who deduct this home office expense every year and they have not been audited or questioned by the Internal Revenue Service. So if you would like us to help you with that home office deduction calculation or the preparation of your tax return, we would love to do that. If you have any other questions about home office deductions that I haven't answered here, please email me at Bradley@W.B.Cooper CPA.com.